Welcome everyone to the Zenith meeting on September 11th. I would like to stop for a second to remember the death and bruise of 9/11. Moving on to our meeting notices, FINOS project leads are responsible for observing the FINOS guidelines for running project meetings. Project maintainers can find additional resources in the FINOS maintenance cheat sheet. All participants in FINOS project meetings are subject to the Linux Foundation antitrust policy, the FINOS community code of conduct, and all other FINOS policies. FINOS meetings involve participation by industry competitors, and it is the intention of FINOS and the Linux Foundation to conduct all of its activities in accordance with applicable antitrust and competition laws. It is therefore extremely important that attendees adhere to meeting agendas and be aware of and not participate in any activities that are prohibited under applicable U.S. state, federal, or foreign antitrust and competition laws. Please contact legal@finos.org with any questions. FINOS project meetings may be recorded for use solely by the FINOS team for administration purposes in very limited instances, and this is one of them. And with explicit approval, recordings may be made more widely available, so we will make this recording more widely available. We are on issue 186. Ouch, I forgot to update the date, so no, it is not July the 3rd, but we are still on issue 186, so use either the QR code or search for issue 186. And please do enter the usual two information, your name and your affiliation. If you have something there, this is for us to track who joined which meeting and to better serve our community. So we are on issue 186 again. And our agenda is very quick. We are going to mention again the New York City OSFF, which is actually coming up in little more than a month. If you have not signed up yet, please do so. And without further ado, I am going to give the stage to our special guest, IBM, who will talk about everything quantum.
Thanks, Peter. So let me first share my screen. Okay. So I guess, does this work?
Yep, we can see it.
Yeah, perfect. Awesome. Yeah, thanks a lot for the invitation. So I'm Manuel Preusel. I work for IBM Quantum. And I'm there globally responsible for the financial sector and applications for the financial sector. I've been in, let's say, various roles in the financial industry. I spent most of my time actually in AI, over 20 years, and in the banking sector, had also various executive roles. Now, the last few years, I've transitioned now full-time into quantum. And so I do spend quite a bit of time either in various boardrooms and trying to help people understand what this technology even is or what it means. But on the other side, I do spend time then with our technical teams to work together on essentially deriving first use cases or prototype applications. So early explorations of this emerging tech. The purpose of this presentation, I guess, is really just to give you a bit of a clue what's going on. We'll start with a quick intro of quantum and how it stands with respect to other technologies. So really how you should look at this. And the idea really there is to make sure we try to separate a bit between a lot of the hype that's going around of this around quantum computing or quantum technologies in general, and what we think is practically relevant. And then in the second half, I'm then diving deeper into really where we stand. So what do we think actually this is useful for, and what it isn't. And what we think we can do with these devices today versus what we think will require further engineering or research. Yeah, so as I said, hope it's a nice package. We'll then have certainly, now less than an hour that we have together for time for questions. All right, so let me start this. All right, so I'll start with just a very broad overview, kind of to make the point what we are looking at. Again, this is a perspective from IBM, but I think it also more generally holds. So the main idea of this illustration is a little bit that obviously the financial system, I mean, you all know this, pretty much runs on technology, so you really cannot think of it without it anymore. It's used in all kinds of corners, from running the system as well as its resilience, so helping us to estimate risk, help us to derive better decisions under uncertainty. It's also used for, new innovation and productivity improvements, especially the recent developments with GenAI has showed that. We're quite interested in this. Mainframe, obviously, as an example, is still a backbone that we all rely on. And quantum sort of is now, the new kid on the block that we start to explore. The main point is obviously, and this goes a little bit back to what this even is. And I think the easiest way how to think of it is actually to start with information or information technology fundamentally, by just, taking or accepting the fact that, we have developed well-established schemes to encode information from the basic element of the binary, of the bit. And now what we're trying to do is actually is to encode information differently and actually use the tools that we have accessible with this different representation in a quantum computer, which is the qubit, or the quantum bit. And I'll say a little bit more about this, what this is, but I think this is just a reminder that, these technologies that are listed here, so sometimes we call this classical technologies, classical computer farms, regardless of what kind of architecture and the chip level you have, it's CPU or GPU or TPU, AIU, you call it. Yeah, I think there's a fundamental now difference is if we are moving to quantum and look at certain applications for quantum computing, you really need to start and not forget about the fact that we are starting from a complete different representation of information. So it's not like, okay, I have a quantum computer, just does everything faster. No, that would be already a wrong statement. So you should really start from no, it's looking at a different representation of information. There's a different mathematical tool set or an enhanced tool set that we now have, and we're trying to figure out what we can do with this tool set. And this is basically the whole purpose of this. Yeah, so it's an enhancement, not a replacement. This is the only slide I have, and I won't bore you with fundamentals of quantum information science or quantum technology. But the only thing you should just take away from this is that if you look at information fundamentally, it always has been rooted in the macroscopic nature of how we look at the world. Literally using our eyes. From this, we derived pretty much theoretical models or also probability theory even, and tools, that we now all rely on, right? All of our intuition and mathematics is based on this, or derived from that initially, yeah. From computing's perspective, right? So this has obviously fed then into, once we learned how we had a scalable representation of information, to then develop different over decades and so on, different technologies that are good at certain things. Yeah, and then when we use these technologies as a tool to do something useful, again, for a particular use case, they make sense in particular scenarios and others less. So it's always about the right combination of them. And now we're just adding an additional ingredient that is not as old as the previous one. So we're all technology, IT is based, which literally goes back, I think, over 4,000 years since the abacus. Fundamentally, in terms of how logic works, there hasn't much changed, except obviously the digitization and computing around this. But really for things we couldn't observe with our eyes, this really only started roughly in the 20s of the last century. So it's not as old, right? In terms of trying to figure things out, how things work at the microscopic level. So here you needed now devices that allow you to kind of make sense of how nature works, or how nature actually processes information or does computation. This led then to, again, our theoretical foundations. This is where the term quantum mechanics comes from, or quantum, yeah. And it's a sort of extension of mathematical tools or capabilities, yeah, that we then have access at this microscopic level. Interestingly enough, while this is a pretty complex theory, you can always collapse it back down to what we have classically. Yeah, so it's really an extension of this. Yeah, but what is different is that the particular tools that quantum mechanics gives us is really only available at this level, at this microscopic level. So again, we came up with a unit to encode information, which I already mentioned, which is the qubit, where at the end we do then operations on them and essentially modify this information and sort of think of it as in-memory computation, because I can only do this while I'm modifying it and I cannot read out in the middle. Yeah, so I really have to do the modifications to do a computation only at the end when the algorithm is done. I can actually use it, and then it's again classical information which is encoded in bits. And then the question is, okay, when I have a program, you can think of it like this. So the same way how you write a code today, yeah, you have some, let's say when you develop a model, you have some code that is purely classical and there's some statistical tools or whatever. And then there's a particular step that, for example, you want a quantum computer to look at. So you send an API call to a quantum computer that does something. You get back a classical signal, and you use that output to continue processing or working with it. Yeah, so these are what we call sort of hybrid workflows, and they are always use case centric. So they're not sort of a generic, like an accelerator. Like if you think of it as a GPU, in many cases, it's just an accelerator. For quantum, this is very, very different, because you really have to also formulate and encode the problem so that a quantum computer actually can make sense of it. Now, there's a long history of obviously developments of supercomputing, where people have looked at all kinds of things. The bottom, I think you know quite well, from really the early basics of having these large clusters of computers to the latest generation of supercomputers, yeah, and GPU farms or whatever now. Yeah, and if you look at the timeline for quantum, that was entirely really independent of that other string that started, again, I mentioned this before, was the theory in the 20s, and then quantum information science, where people tried to actually use then quantum to encode information and so on. So all these theoretical foundations started roughly in the 70s. And then pretty much since the 80s or roughly 90s, the race of actually building real quantum computers has started. From IBM's perspective, we put the first quantum computer in the cloud in 2016. And ever since, actually, we, the community, meanwhile, we have a whole ecosystem around this from all kinds of, also different supply chains that are working hand in hand here together to build scalable enterprise-grade systems. And that's what I'll talk a little bit more about now. So what we have done, again, from IBM's perspective, we started releasing these essentially development roadmaps to make very transparent of what we're working on, what's going on, also with a certain outlook, so that you kind of know what to expect in the coming years, what's still in progress, where we are not yet ready, and so on. And you see, and as I said, I'm not going to spend much time here because I really want to talk more about finance applications. But when you see these kind of roadmaps or updates, you should pretty much look at these different layers working hand in hand. So the black one here in the middle is showing you the evolution of different chips and different capabilities. We started now separating by what's called gates. So how many operations we actually can run. before the end of a quantum circuit, before we then have to start again. Yeah, so a lot of iterations. I mean, if you have an iterative algorithm, so you have sort of a figure that you can keep in mind. The blue layer, you can kind of interpret this as sort of your operating system, in a sense, which is your core functions and capabilities that interact with the quantum computer. And then you have sort of the top layers here, which is what I'm going to focus on more, which is then functions or different abstraction layers, yeah, that you then can use like an SDK, yeah, that then also, which I'll say a few words about that, which is called Qiskit, that then allows you to run different algorithms or to develop then different applications. And so obviously we are in this regime here now, so we cannot tick off the boxes yet of 2025, but to give you an intuition what the current systems look like, so this is our system 2. And if you look here in the middle, you sort of have here the quantum computers. So in this case, there are 3 quantum computers in it. And if you zoom in one more, this is the actual quantum chip where all of the action happens. And essentially what you see sticking out here are control electronics and essentially classical supercomputing capabilities, let's say, that interact then with this. But you, from a user perspective, you obviously don't see this all. This is essentially then all orchestrated, how this behaves, and also this thing is built in such a way that you can cluster multiple quantum computers across different units together. And this is what we announced recently, also earlier this year. And this is going to be obviously an exciting moment in terms of the applications, and a lot of financial institutions are already obviously keeping this in mind, because the usual timescales are to do anything new is much longer. And having worked for a large bank, so I know this quite well. So we're talking about literally under 4 years that we have in front of us before what we call a fault-tolerant quantum computer. So these are computers that are error-corrected. Today we have noisy quantum computers where we run an algorithm on a quantum computer, and what comes out is always noise in it. So we have error mitigation or noise mitigation algorithms that sort of think of it like subtract off the noise to get then the accurate output. And this obviously comes with certain limitations. So we're really looking forward to then this era where you have in flight, as you're progressing or running the algorithm, these corrections. And this is going to look like this. So this is a rendering of the system that will then come live. And as I said, I won't say too much here. You can all watch this online. There's this video on YouTube that gives you sort of a sense of how these systems then in 2029 will look like, and how they interact with classical supercomputers. And this is currently being built. So you see here in Poughkeepsie, New York, we are building the first of these kinds, where we're extending our existent data centers. So this is all the current systems that are live today that you see here on the right-hand side. And we are extending this by these a fault-tolerant quantum computer that then can also work with these other systems together. And the perspective on applications I want to leave here with you is, I mean, I think the financial sector started, I mean, when in 2016, the first system was live on the cloud, people started playing with it. Already in 2017, the first financial institutions such as JP Morgan or Goldman Sachs and so on started looking at this and playing around. And I think a lot of this since then has happened. And this is really just an illustration to make people excited, but also raise awareness that there's still many open questions and to-dos before we can actually use these capabilities. Yeah, so this is just, again, without really making you completely understand what qubits or logical qubits in this case are, but that kind of raises the point that, even with 30, you can run a program on a simple Mac. If you go to 48, you already need a whole supercomputer to have the same representation or the same of what's called a state in one particular moment. If you go to 60, again, it's really just artificially to make the point. Yeah, you would literally have to connect all computers on Earth. And in 2029, we'll have a system with 200 logical qubits. Obviously, the point here is that this will open up an era of exploration where I think we don't even know yet entirely what this capability will give us and what new applications or ideas will come. But it's exactly I think the great excitement about this, because while we have some use case ideas and some early explorations with the noisy quantum computers today, we strongly believe that once these error-corrected quantum systems will come live, also the community will come up with new ideas and use cases. While it's always nice to talk about how complex quantum computing is, I think the thing you should just make it more easy, or just to don't scare you. At the end of the day, this is just a simple API call. Yeah, so and this is also how we work, right? So when we derive a use case or an application, we work in, first of all, turning a problem and encoding it into a representation and a mathematical representation that a quantum computer could understand. Then you derive essentially a program, which is essentially the iteration or the gates that the quantum computer has to run, that formulates a package, and you send this package via an API call. All of the stuff, the processing, the runtime, and how often it has to read or write out, and maybe it's an iterative algorithm. So it learns, gets an output, then it sends it back up and adjusts the parameters, for example, and so on. At the end, you just get a return, and you work then with the return to embed this in, as I said, in a model.
I have a question.
Yeah, go ahead.
Yeah, what's IBM's thinking about the interaction between classic compute and quantum compute? In other words, does it think that quantum compute will largely replace classical compute, or would they be integrated in some way, maybe similar to how GPUs augment CPUs and that type of thing?
Yeah, I think I mentioned this very quickly before, but I can maybe emphasize this a little bit more. I mean, we strongly believe, and I think this is not just us, there is no such thing of a replacement. Also, to be honest, it doesn't make any sense. I'm honestly, yes, although I'm on the technology side, I'm representing the technology here. But to be honest, I'm more on the problem side. So I like to solve problems in certain tools, and technology is just a tool, is good for certain parts of solving a problem. And usually it never makes sense to think there's one tool that does it all, right? So really, we are thinking of quantum just as an additional tool, and it's a mix of tools that needs to work together. I think the GPU, yes, is a good example how people can think of this, although, as I said in the beginning, a quantum computer is really something very different than a GPU, because it starts from the information.
Yes.
Yeah, but think of it like this. Yeah, so we have classical computers, CPUs, GPUs, and then the QPU working together, and different resources will be called at different times for different purposes. But then at the end, the composition of all of them is use case specific, and or maybe sometimes data specific for which part needs what, and so on. But yeah, definitely don't think of a replacement. Think as an orchestration and a close collaboration between these tools.
Okay. We made a road trip up to the Hawthorne lab, I think 2018 or so, something like that, for a day trip. The quantum lab there, is Poughkeepsie an extension of that, or is it a completely different data center?
Yeah, so I think what I recommend is going up to Yorktown.
Yeah.
So that's about an hour north of Manhattan, and this is where we have also the IBM System 2. You also have an AI supercomputer there. I think it's definitely worth a trip. There's a lot of changes happening there. The Poughkeepsie location is where we have more of these quantum systems that are in production or live. but it also is a facility that we are now extending with what I showed you before with these error-corrected quantum systems. Yeah, so it's already in use, but will be extended for this purpose.
Okay, thank you.
Sure. Okay, yeah, so I'll go speed a little bit up. So just nice numbers. I think we, from IBM's perspective, we care quite a lot about the community. So we call this the IBM Quantum Network that has been every year ever since growing. It's really a developer community, but also a community of practitioners across all industries, as well as government labs and universities. We have over 275 now in there, and among them, and I'll talk more about the financial sector in a sec, is also part of this. And it's pretty much, as I said before, 2017, we had the first ones already joining this network, and I think that's it's been quite a nice journey. And along with this, also we strongly believe in open source. So Qiskit is one of the most successful. Or actually, according to the stats, the most successful open source software development kit for programming a quantum computer and interacting with classical computers. And so we publish regularly also here benchmarks and compare different compilers or transpilers with respect to Qiskit and so on. So again, the entirely community-driven effort. And this community attracts a lot of different organizations, as I said before. And I'll more focus now on the industry here, but that just gives you a taste. And I'll actually start from our CEO. So I think we've been over the years quite careful also in communication and so on. And the roadmap actually shows, when you look at all the checkboxes, although this was always pretty ambitious when we always updated a roadmap, we managed to really keep the pace. And this is a statement just from Arvind from earlier this year, where I think an interesting one is where I think we believe we really bring the same engineering rigor to quantum that we bring to the mainframe. I think for a lot of mainframe people, this brings reassurance that we are looking again for enterprise-grade stability. And we can actually leverage quite a lot also in the engineering from our knowledge of the semiconductor industry. But happened to be that he also highlighted the importance of the financial sector, leveraging this technology, and I'll spend more on the use cases here, but it's just a statement. I think that still the financial sector is definitely one of the, I would say, top 2 or top 3 industries that we believe will be most impacted by this technology. Now, if you ask a little bit around and what's currently going on, there are some statements all from different, let's say, financial statements, and that I'm summarizing here. The first one is one you probably heard as well. I'm not going to say the name, but it's pretty close to you. This was the discussion around Gen AI, and if you just use a number and you assume that you could now boost productivity or your set of use cases that you have around this by 95% of those, you need to just accept that this technology is a commodity now, and so how much different you're going to be compared to your neighbor in a few years. So you should start thinking strategically about the other 5%. And while quantum is only one of them, I think it emphasizes also a little bit of attitude that we see, that despite we are talking about an emerging technology, you should really think about the pace of advancement of this technology, and to make yourself clear that you can't really be here a slow follower or something like this. The other perspective, because I also have, I literally talk to all financial regulators in the world, at least the largest ones, I would say, and there's one common theme where they started now to also motivate research and investigation of quantum algorithms to model financial markets in particular, not only. And this is an observation which people usually call that the frequency of models going offline is increasing. What does this mean? When you have a model that's critical, that its output is critical to derive a business decision, it's usually regulated and it has a very strict, you have very strict information on when you're allowed to use the model and when not. Statistically speaking, that is defined by a confidence interval or band, that if it's outside of it, it literally goes offline, and since you're not allowed to use it. And we did see that this is going more and more frequently. The number of these models are going offline over the years. Just to recall a couple of moments in time when people have realized this, there was COVID, when we seen some models going offline for like 6 months because customer behavior changed. All of these models that never saw that. So the client advisor had to price certain, let's say, products again on their gut feeling on the Excel sheet. So as long as nothing happens in between, you're, good luck. Yeah, but it's been like this because you had to wait until you had enough data again to refit or recalibrate your models. And depending on the nature of your model, that was a problem. But there were a few more instances in between ever since. Obviously, you had the Ukraine war, you had other geopolitical activities, you had the things now around the tariffs, the bond market, and so on, what you call it. Yeah. And what this makes is, from a regulatory perspective, is that the time scales or the time windows that you have for backtesting, improving or creating confidence that your models are accurate in terms of or representative for the current environment you're in, are shrinking or getting shorter, because otherwise you're biasing them too much. And this is an issue, for fundamentally for a lot of different models. And again, that's one of the reasons why also now financial regulators are urging more innovation and research in new technologies such as quantum. That comes with a completely different ansatz or solution approach. Not saying that this will solve it, but it's definitely why there's a lot of interest in looking at this. And obviously there are a lot of conversations, right? So we need to not forget about, that there's a lot of stuff happening in the world. So while technology is great, we shouldn't miss out that there are certain challenges we need to care about now. This is obviously an illustration here, just taken from BlackRock, looking at the recent uncertainty that's has been hitting us. They sometimes call this the mega forces, with certain structural shifts that will also influence long-term valuations or models that try to kind of forecast what will happen the next couple of years, and that creates a lot of, let's say, bias that's intrinsic now in these models, and people are figuring out how we can improve these models with even less information. Now that brings me to the full purpose. Actually, all use cases that I'll share with you really have this pattern. We really care about quantum tech to only do one thing. And I don't want to convolute too much, because there are always actually two topics. One is the security angle that I'm not talking about here today, which is more on the cryptography side. I'm more talking about the application in the business, which is by improving models, which means to reduce the error. As I said before, so when models don't work, so really use the classical part. The question before was, for what you use a quantum computer for, will it replace? No, actually we zoom in, or the other way, you start with what you have today. And for those models that you really care about, when you write your model documentation, you need to exactly explain and prove in which cases not just it works, but where it does not. And this is for which you need a control framework, or risk mitigation, and so on. This is where your internal audit and your auditors will bug you with, right? And these are exactly the instances where your sources of errors are coming from, are usually associated to the complexity, the uncertainty of the input. And this is really where we want to zoom in with a quantum computer. And it doesn't mean that all the problems that exist out there need a quantum computer. There are many cases where you can just bypass and don't even need any model. You can just use a business experience. But we've seen that essentially especially when you talk about markets, where the component or the time component or these buckets of representative representations are shrinking, this is exactly where we think a quantum in this hybrid approach, where a model has a classical computer, a piece of it. If you think about AI or machine learning, think of it, you're training some part classically, maybe using an output of one model, feeding it as an input to a quantum computer, then take that output again, feeding into another machine learning model, and so on, right? So there are different architectures of solutions depending on the problem or the data. But that's kind of the overarching idea. And so we are chasing essentially two targets. So if you look at how a bank works from top to bottom, we essentially looking for two contributions to models. The one that you probably heard all of is speed. So I think if you just Google around and say quantum and finance, you will see you will see various claims where people say, well, okay, if I would have a quantum computer, it would go exponentially faster. I could do something with the whole universe. It would take the age of the universe it would take to run this algorithm. So a lot of people think, speed is changing the world. And I think so far, if you look a little bit deeper beyond the hype, you will find that there are actually not many algorithms out there that give you provable guarantees for speed ups. And some of them we don't really know yet what all of the trade-offs are, because there's a speed maybe that you measure only on the quantum computer, but what you really care about from a business standpoint is the total net. This means the classical systems that also had to be used to correct errors on the quantum computer. So really like the net benefit. And at the moment, we have algorithms where we know that you could achieve with an error-corrected quantum computer up to like quadratic speedups. So think of Monte Carlo simulations is always a classic that people bring. That's not really so much, right? So if you think about a quadratic speedup, and then the question is, okay, what is actually the net benefit if you add up all of the other classical compute that you need to add on top? So people are working on, let's say, new algorithms that essentially support this objective B, to make algorithms faster or computations faster, considering everything, not just the quantum part alone. And then in interesting conversations, and this is where people usually don't see so much, but it's what I mostly already mentioned, is the main objective in terms of also economic impact that we hope to achieve with a quantum computer is actually, at least for the financial sector, is not on speed. Speed is maybe one of them, but the more important one is quality. So especially when you deal with uncertainty, stochastic data, temporal patterns in your in your data, and we have very complex, higher dimensional states where you're trying to understand different correlations between them and so on. So really going into the complexity angle or improving the quality of a model at the end of the day by reducing its error. Speed can certainly contribute to this, but it will come, I think, also in a little bit of a different order. So for speed, we hope, again, I can make this example, although it's not the best, with Monte Carlo, where today in practice, what you have, you have in theory thousands and thousands of, for example, risk factors you could think, but you cannot. Because it's just literally, if I have to wait for my program to finish 3 years, but I need it next week or tomorrow already, obviously it's not helpful. This is the famous value at risk calculation is always used for this as an example that you can run overnight and you're good with it. Now, when you do this and you design which factors you use, well, you make a hypothesis, right? You're not always right with this hypothesis, but you just make it because you have no other chance. So the idea is obviously if I cannot even, if I can run something faster with a certain number of features or factors, well, if I now can add more factors that are relevant, and still run at the same time because now I added more factors, but then the quality will benefit from it. Yeah, so maybe then the error goes down. So this is when then the speed can actually contribute to quality improvements. But all use cases really financial institutions are looking today are, at the end have this kind of topology or pattern. So if a classical algorithm or a program gives you some benefit, let's say this is the gray piece, and it almost feels like asymptotic. Yeah, so you kind of hit and you try new techniques, new technologies or whatever. Yeah, you always marginally improve. So if we manage to find a use case that where even a marginal improvement by adding now quantum to it, where we are zooming into the error of the model, translates into a large economic potential, then we have a case that's at least for the period that we're in now, is of interest. Because if there's no large value, you could expect why you would invest in emerging tech now at all. So this is one element in selecting what is interesting to investigate. So they have to be hard, but need to translate also in great potential in terms of economic value. Yeah. The other thing is, and this is what most people also think, is when we do benchmarking. So we started now, there's a lot of effort going into finding benchmarking paradigms. Also standards are not really there. So how would you benchmark this and so on? It's very usually use case centric or specific and so on. So I think the community is starting slowly to develop these, let's say, foundations. But the other thing I think what I always like to people remind is they say, on a classical computer, I could do this here faster, and maybe on a quantum computer, it could do the same, but it's much slower, and so on. And I think this is, again, a mindset thing where people think of it like two separate things. And if you look at it and compose your solution starting from the problem, not from the technology, by starting, okay, so where are actually the errors and how good I can actually fix them classically? And those that I cannot, for whatever reason, this is actually makes sense now to zoom in, can quantum help there? And if the quantum approach can help, then actually this line can only go up in one direction. It cannot be lower, right? Because the composite of lowering the error makes the whole thing overall better. And obviously classical also improves over time. I mean, we just see this with AI and new ideas that people are having. So also here we should be very clear that this is always a moving target, that over time, these different technologies just start to work closer and closer together. And we also find better frameworks for the user at the end of the day to make it easier for them to use it. Now, we have now these three communities, I would say. So obviously the oldest ones, literally from a developer theory perspective, dates back 120 years, which is the green one, which is mathematical finance or quantitative finance. That's obviously the richest one. Then we have these bubbles coming up around machine learning, AI, and so on, that banks have started to investigate, and now quantum is sort of the new kid on the block. And I already said that roughly 2017, the community started to, what I call here, toy explorations. Yeah, so taking a very well-known problem, most of them we know as holy grail problems, such as pricing an option, for example. Some risk analysis or portfolio optimization is always a classic, that people have tried to play with. And the main effort here was really like, okay, how would I even take this problem that I know very well, and how would I encode this into something that can be interpreted or make sense for a quantum computer, and what I can learn from it. Yeah, so maybe what does it give it to me? Yeah, so and this was also used to develop and inspire new algorithms, and that can both work with, let's say, current noisy quantum computers, or are only going to work when we have fully error-corrected quantum computers. Yeah, so this period, roughly until 2023, was really like in these evaluations that helped us also to project, what we need to do, to move forward. And we believe we started to slowly now enter this sort of a new era. We label this quantum utility, or on the path towards advantage, where you can extract actually some real value. And we do see, and actually if I would have shown you this a year ago, the slide looked different, because also here the priorities for the industry has changed. So we roughly define these 4 blocks of use cases. So the biggest boom now is currently in the investment sector, quantitative investment sector, from wealth management, asset management to investment banking. Is sort of by far now the biggest demand and R&D effort that are going in there. And then you have the whole domain around pricing and balance sheet optimization as also a particular one, and especially in the retail sector. That's a very promising field. And then you still have sort of the classic that where always people try and play with new ideas, which has been the same for ML, is in financial crime. Yeah, so fraud analytics, let's say, in general. Yeah, and risk is, although it's strongly actually in terms of the math or the models affiliated to this, when you think of your managing a portfolio or diversifying it and so on, is a little bit lagged. And this is, I think, may change over the years because we now see also the regulator opening up the doors for new innovation there. So it's not a technology question, it's also a cultural question here. But that's the current picture that we see, at least before 2029. This may shift. So we see the top priority again in the front office, investment management, and trade optimization and asset allocation problems split into 2 areas. One is around the optimization of multiple objectives. So think of, for example, constructing a portfolio, building a new ETF, and so on. We recently published there some work with Vanguard. So I encourage you to read that if you're interested to learn more. And the other one is with respect to modeling financial markets, or stochastic modeling as summarized here. There's also an upcoming work with another large GSIB bank coming out. So you can read a little bit more on this. On the risk side, as I said, there's a big boom also in the insurance sector now, which is on hedging strategies and exposure analysis, again, in these 2 areas I just mentioned. And although it used to be a lot more investigation, let's say if I would have shown you this 2 years ago, there was a lot of effort in payments fraud and trying to see classification models. Now this slowly moves more into more complex graph problems, which are anti-money laundering, countering terrorist financing, towards a path used in trade surveillance, so insider trading, for example, which is then the regime of generative and also graph analytics, where a quantum computer is used as part of the model composite. And in terms of the 4th priority, which is again a little bit more to the right here, is other front office use cases. And also this over the years has shrinked into a reduced scope. So client analytics is very broad. We know this all from ML, data science, and so on. This now really has to slowly move into optimization cases such as pricing or balance sheet management, again, an optimization use case. So in general, we see most of the activity now going towards optimization. You can take these use cases also and split them in different, what we call complexity levels, depending on where we are in the technology. So we think level 1 and level 2 are use cases that make sense to explore now and push also the field further with these noisy quantum computers, while we have some exceptional banks, but usually only the very big ones, that look at level 3 already now, in particular to create IP, patents, and so on, where you may not expect any business value advantage before you have a fault-tolerant quantum computer. But this may not be your near goal. This may be your long-term goal. So we think level 3 is really something that needs an error-corrected quantum computer. Now there are, as I said, different institutions that are working on this, and we are quite fortunate to work with a lot of interesting clients on that. And they usually go through some sort of a phase of, okay, what is this even, to then building with small applications, to then finally, and I think none of them are really that far, where we are saying, I would now run this in a production environment and so on. I think this is a journey ongoing. Yeah, so we are definitely not there. But just to give you a few examples, what some do, I mean, most of the institutions do not publish. Some do, and those that are published, I think I have two examples here that are interesting. I'll share that. I mean, you have the recording. You can also read this up. There's an interesting paper on this. This was also published together with Vanguard, and this was in the space of limit order book mid-price predictions, where the idea was to reduce the uncertainty in these estimates. And this was done with real quantum computers, so in a sort of a mix of what sometimes people call quantum AI or quantum machine learning. And so if you want to learn more, I definitely encourage you. It's, again, a case in the asset management space. And a more recent one that just came out, I think 2 or 3 weeks ago, is with Vanguard, which was with respect to actually creating an ETF. So this was in the bond market, using, again, a real quantum computer. And the idea was to, for the trader at the end of the day, to help make a composition or a recommendation of a portfolio, so a portfolio construction problem that fits all of the different constraints up to a certain error. And again, here, if you want to learn more, there's also some published work that may be of interest to you. So I think I'll go slowly towards the end, and I'll leave you with this message. So as I said a few times now, I think the community has strong belief that for particular optimization problems, as I mentioned, some of them, there's a great potential. Also recent work that was published together with Los Alamos, as well as Zeus Institute in Berlin, which is quite known for benchmarking, also classical optimization algorithms. We feel a lot more confident that this is a domain where also the financial sector can benefit from. So I'll jump over this because I think I mentioned most of this. I think we do see these priorities now from financial markets, top number 1, pricing and financial crime number 3. And yeah, the interesting opportunities if you look at different use case examples in each of them that are currently investigated. But last but not least, I want to leave you with a sort of a lessons learned. Since we've been doing this now for a while, we think there are sort of 3 ingredients that it really takes to have I think a successful start, or at least a more confidence path to do something useful with it. And this is pretty much one of the hardest one, is to find the right use case. And I think lessons learned there is don't invent the wheel. So really start from existing models where you have a very, very thorough understanding of the limitations of these models or the trade-offs that you need to do or need to make. Then don't simplify it and make it artificial. Do it on real production data. Do it on the real thing, where you also know the limitations you have. Don't make something up. And use the same thorough requirements as model validation is done in banks, which I used to do as well myself. So backtesting, benchmarking scenarios, don't simplify it just because you have quantum in the mix. And at the end, you need to really think carefully how you map your problem to an appropriate algorithm, and then design a scaling strategy where over time, maybe the composition of what classical does versus quantum is possible to shape or change as the technology starts to mature. Good. I think that's all I had in terms of my quick run through, and I think we still have some time for questions.
Yeah, Q&A. Please ask away. No bad questions. If you need help, please use the raise hand option in Zoom, and we can help you unmute. No questions. Okay, that's okay. There's a question.
Yeah. Thank you, Manuel, for the insights into the world of quantum. Quick question: if somebody were to play with it, what options does IBM have to go and do some hands-on work with this, accessing the data on the quantum computer through the Qiskit API and stuff.
So if your question about data access,
so are you asking about
access?
whether there's a sandbox for people who are
Yeah, that's
okay, yeah. So whether there's a sandbox environment that people can start playing with this without paying some extraordinary fees or something, yeah.
Yeah, sure. Unfortunately, I don't have a slide here now.
Or trainings
sure.
or something.
Yeah, of course. Yeah, it's a pity that I didn't include a slide on this. So actually, IBM has a large range of let's say getting started things. I mean, if you just go on qiskit.org, actually there's a lot of stuff already linked, right? So you find tutorials, Jupyter notebooks, to get started. You can locally install if you have Python, you can pip install it. And there's also a book associated to it that helps you understand what's going on. Then there are, online learnings. There's a YouTube channel about it where we're, giving learning. There's a learning platform as well that you can access, IBM Quantum Learning Platform. If you just go on ibm.com/quantum, I think, you will find all of the links there. So yeah, I think there's a lot of things you can just do. On using the actual quantum computers, you have also free minutes per month that you can use. Obviously, these are just meant for experimentation, small experiments. So you're not going to, do something super exciting, yeah. But I think for educational purposes, it's a good start. And then obviously there are more. Then the moment you start spending money, you can then increase, buy more minutes, or then join the IBM Quantum Network, and then you have some dedicated access and so on. Yeah, so there are different ways then how to go up. But I think this is sort of just for learning. This is the easiest way of getting started. And then, I mean, some companies, we have one in particular at the moment, they really literally managed to, I think within a couple of days, for their company to send up a sandbox where they spin up a couple of VMs with a Jupyter Notebook server and had Qiskit pre-installed and some local, test data that you can work with, just for employees to get affiliated with it or interested in it to learn more. Yeah. So I think there are different ways how you can organize this in your company.
Okay, I cannot pronounce your name. Shuleip? We cannot hear you yet.
Hello, can you guys hear me?
Yeah.
Sorry. Okay, awesome. Thank you very much. And then I learned a lot, Manuel. I really appreciate it. I know it's a little over time, but I wanted to ask you that because you mentioned a little bit about the AML, because I know that enhanced due diligence and AML KYC is one of the biggest issue in finance. And also Bitcoin is being very, cryptocurrency, and like a lot of like regulation is being talked. So could you please give us a little more about how the quantum computing can be helpful to process it, or like what's our future on that?
Yeah, so I mean, AML is, I used to work this also on the classical side before, so it's a continuous challenge for, I think, for the whole world. From a quantum computing perspective, some financial institutions, so some larger financial groups are looking at this, and you can look at it from different perspectives. I think what I've seen is two directions. One where I think is a little bit more constrained because of the way how people organize data. So AML is a relational network where you're combining due diligence, KYC data sort of as a heat map, and you combine it with transactional information and so on. And so it's, from a mathematical sense, actually these are graphs, but people are often just flattening it down in sort of a tabular data set. And then you have a label which says, yeah, this was AML type, whatever, XYZ, or it was none, right? And then you try to train a machine learning model, or you develop thresholds or rules yeah, to then trigger these AML alerts. And while this obviously actually sometimes simplifies the problem because you're flattening it, that's why also ML and AI algorithms are not really so good. So the next stage, and this is really most of the effort now goes into, is if you're actually storing this information in a graph database. And in this moment, then the question is, okay, which subgraph associates to a certain AML pattern? So it's really like finding a search problem. And this is the kind of, let's say, research that's currently going on there as well, where we have also a project there and this, where then the quantum algorithm is used to essentially find these AML patterns. Yeah, I think this is one particular direction that's currently explored, but I think this is, I didn't show this on the slides, but I do think that the size of the problem is so huge that for AML, I would expect that we need more advanced systems or larger systems to work with. I would guess that this will more go towards the error corrected or fault tolerant regime, which is 2029 plus, yeah. That you will see then these devices actually to be able to go to a relevant scale, because AML, again, it's a size problem. You're kind of looking for needles in a haystack kind of problem. And that's why this problem is so hard, right? Yeah. But I'm happy to, I think we're way over time, but I'm happy to, feel also free to reach out if you want to learn more.
Will do. Thank you very much.
Thank you.
Yeah, and I have one more quick question. I don't know if it's time. It's already like 4 minutes past. So you have a minute or two or to talk about like cryptography. Because
yeah, sure.
NIST has this guideline, right, on the cryptography, like the PQC, post-quantum cryptography, mandate to meet the guidelines. And now that's the question is more related to tied up with the crypto and the encryption related stuff that happens with crypto and stablecoin, bringing the regulation been coming, like how do you see it as both as a threat and as an enabler for securing the encryptions?
Yeah, I can give you my view, but although I have to say, we do have the experts. From the crypto side, actually, 3 of the 4 finalists that were selected by NIST came from IBM, so we do have a lot of expertise here. I'm not certainly one of them, but what I can tell you is there are twofold discussions. So more obviously in the risk mitigation that doesn't require any quantum computer, right? So I don't want to simplify the problem, but it's like, okay, first find your crypto where you have it, then you put it in a list, so you have an inventory, and then you sort the list based on the risk exposure classification, and then you start from the top, right? And so on, right? To mitigate then the risk. And then maybe try or benchmark this or test this first in the sandbox, whatever. I think this is one effort, and I think this is a huge one. But I think it's not just the company itself, right? Because you have supply chains, you have external vendors, they need to do the same. If there's only one hole, well, you just need one. And so I think there's a huge effort going on, and I think it's a must that you have to do something. Even if people cannot encrypt it right now, there's this harvest decrypt later thing, right? Where people just store data endlessly and then they wait until a powerful quantum computer is there to read it, and then and so on. But then there's the other thing, which I think is more interesting on the benefits. If we look at the evolution of digital assets, that is, still, I think there's a lot of room also for additional governance, in particular trust, that we build in this. And if we, from the beginning, as we are in parallel sort of building up these more secure standards, I think there's no other way to embed quantum safe cryptography into the whole digital asset space in order to make it a trusted a set of instruments to work with. Otherwise, their value will be constantly at risk. and nobody's gonna trade them, right? Once you have these quantum computers, and this is just a few years down the road. So I do think it creates an opportunity also for those. Think of also market makers, that can really be at the forefront of providing quantum safe digital assets or exchanges that people then will listen or want to join, and so on. So a lot of, I think, pioneering effort can be put into this. Yeah.
Sure. Thank you. Yeah, probably a discussion for another day, Peter. Crypto.
Yeah,
and
I don't
quantum.
want to cut short. Just I know people have things to do, so I would like to really express my full gratitude for Manuel for joining, and I would like to thank everyone for staying over and for the amazing questions. And we will continue. Definitely, we are going to have Manuel back if he's willing to share more. I mean, a full session about just the cryptography part would be probably interested. How IBM sees post-quantum cryptography, or that will be just a separate topic on its own. So thanks everyone for joining.
Thank you,
See
Ryan.
everyone in 2 weeks. Yep. Thank you.
Thank you.
Thank you.